morning everyone, this is Amit Pabari, founder and managing director of CR Forex. From the last couple of weeks, we have observed that rupee generally closed on a weaker note in the NDF market as compared to Indian market. But interestingly, on Friday, it has closed on a stronger note as compared to Indian market closing. Whether that is a sign of a reversal or whether we are moving towards 83 again, let us discuss that in today's presentation. In the current market scenario, there are three factors which are going to impact dollar rupee. Pehla hai Iran versus Israel war. I think in the last week video we have discussed that there are higher probability that de-escalation will happen, and this week we have seen that there is a de-escalation. So basically we can say that it is positive for Indian rupee. The second factor is crude oil. In our last week video, we suggested that despite Iran and Israel war, crude oil chart has given a sell signal, and exactly same has happened. Crude oil has come down last week. We are further expecting that crude oil will fall another 5 to 10% from the current level of 83.14, which will be positive for rupee. Third important factor is rising dollar index. From last couple of weeks, dollar index has been rising because the entire market is expecting that the Fed is only going to decrease interest rate once or twice in the year 2024. But the market is ignoring the fact that US debt and US interest payment on debt is rising at the fastest pace, which is a perfect recipe for any currency to get weaker. Apart from that, in US GDP data is going to come next week. Entire market is expecting that our first quarter GDP data will come lower compared to last quarter, which came at 3.4. If that happens, that will be a negative for dollar index. So now let us conclude the view. Looking at the charts and understanding all the fundamental factors, it is very clear and evident that 83.50 to 83.60 is going to act as a strong resistance for the pair, and gradually the pair is going to move towards 83.25 and 83 kind of a level. Medium term outlook of 82.80 and 82.50 remains intact. Now let us discuss strategy for thin margin exporters like agri exporter or chemical exporters. Most of the thin margin exporters are taking costing near 83.25 kind of level. We will suggest them that they should ideally cover 100% on a back-to-back basis between 83.35 to 83.45 kind of level. If someone wants to wait, they should keep a stop loss of costing or 83.15, whichever is higher. Now let us discuss strategy for thick margin exporters like textile exporter, engineering exporter, pharma exporter. In one of my conversation with a pharma exporter last week, they said that their company books forward only matching their receivable cycle. So if the receivable is in the month of June, they will book for June forwards only. We suggested them they should book long-term forwards because of the following reasons. So the first advantage of booking long-term forward is long-term premiums are higher. For example, if you book a forward for 31st March 2025, the premium percentage what you get is close to 1.62% as compared to if you book a forward for 31st July 2024, the premium percentage will be 1.24%. And the second benefit is there is no tension of cancellation. If the money comes delayed, you don't need to worry for cancellation. But if the money comes on time, you can always utilize the existing long-term forward contract. For hedging, we will suggest them that between 83.30 to 83.45, they should continue increase their hedge ratio. On a confirm order basis, we are suggesting them that they can cover 90 to 95% of their order. On an anticipation basis, we will suggest them they should maintain a hedge ratio of 65 to 70%. Now let us discuss strategy for importers. For importers, we will suggest them they should continue to focus on their near-term imports. If rupee comes near 83.20 to 83.25 level, they should cover 50% of their near-term imports for the next 15 days. Apart from that, they can keep a stop loss of 83.55 and wait for lower levels of 83 and 82.80. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.